Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming U.S. retail sales report and the potential reaction in the dollar. I'm Maria Pachordiz, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, the dollar dropped dramatically last week after the latest U.S. inflation data showed inflation has started to cool down. On Wednesday, we'll get retail sales figures for October. What are we likely to get from this data, and how might it influence the Fed's next moves?
Hello, Maria. It's certainly been a very explosive week in terms of market reactions. We had a huge retreat in the dollar, huge rallies in other assets, and all of it was based on the idea that inflation finally seems to be cooling down. The Fed doesn't need to be quite so aggressive with rate increases, and all of that, I think, sparked some relief moves in most assets. Now, the question really moving forward is, was this an overreaction? The dollar fell 4% last week against the euro in a single week. Was that the beginning of the trend reversal, or was it just an overreaction that was driven by very crowded positioning in long dollar trades? In my view, it was a little bit of an overreaction. The story around the Fed hasn't changed that dramatically, and of course, one data point, relying on one data point to draw conclusions is never a good idea. So that's why the retail sales data will be so important. Now, in October, retail sales are expected to have risen a little bit. They stagnated last month. So the market is sort of expecting a decent batch of data, but I will caution the following. Once you adjust retail sales to inflation, so retail sales numbers are not adjusted for inflation. Once you put inflation in that calculation, retail sales are basically stagnant or falling from last year, right? So yes, retail sales seem to be rising, but they are not really rising as fast as inflation. So it's going to be really interesting to see how this data set plays out. If we get a strong data set, that would sort of push back on the moves that we saw last week in the markets. But on the other hand, if we get a surprisingly soft data set, well, that reinforces the narrative that the Fed will be cautious, and that could extend the latest retreat that we've seen in many assets, in the dollar, and the latest rally in many assets.
So now that inflation seems to be cooling and Congress will likely be divided, which means big government spending packages are off the table, what's the longer term outlook for the dollar?
I think you hit it right on the head. So in my view, the dollar is currently at a crossroads, right? So most of the elements that fueled this spectacular rally that's been running for 1.5 years now, most of those elements seem to be losing their kick. So inflation is cooling down. Congress, as you just outlined, is likely to be divided. So we are unlikely to get any more big spending packages. So the factors that brought the dollar to the dance haven't faded, but they are losing their power a little bit. And meanwhile, the outlook for other major currencies has started to improve, right? So in Europe, we saw a sharp decline in energy prices. So yes, there might be a recession in Europe, but it's probably not going to be as brutal as we thought previously. In the UK, political nerves have calmed down, at least for now. And of course, the Bank of Japan has opened the door for policy changes, and those might happen early next year, perhaps. So combining everything together, I think we're at the crossroads. Markets never move in straight lines. The dollar can obviously still move higher. I think the dollar has one last hurrah, in a sense. We might see another rally in the dollar, but I think that's going to be the final move in this trend, right? I think that this trend is on its final legs.
Marios, thanks so much. And thanks for joining us at xm.com.